What's good, people, traders, and dedicated gold chasers? Welcome back to another video at the Modern Day Trader with your boy Marcy. And today we're doing another case study on pound yen. So, what we expected last week was that we would potentially push up for a little bit and then like sweep these lows, come back, and then potentially push to the upside and continue these up tens. Now, my alternative plan C was that price action would break above these highs that are marked as a dotted line last week, just indicating that these were the previous higher highs. Now, what you can see is that price action had broken above, pulled back, and pushed to the upside. Now, as we always do, we're going to break down the week going from Monday through Friday, and we're going to see exactly where we could have capitalized and how we could have done a good job trading, and not just trading, but looking back on perfect price action to see what trades we missed, how we could have capitalized, and what we can do to get better and improve on those potential trades. So, as I mentioned, Monday, I anticipated the push up, but I was definitely looking for a deeper pullback. So before we even look at what occurred this week, what you can see is that quite clearly on Monday, in like around market open Sunday into Monday, the first candle, the Asian candle, you can see the price action had actually broken above the previous high, forming new market structure. So that then, what that meant to me is that coming into the charts, that price action would potentially either continue pushing to the upside or have a little bit of a pullback Monday, Tuesday, potentially Wednesday too, to form the low of the week and then to push to the upside and have that high of the week with a continuation of market structure on the 4H. With that being said, let's drop down timeframes, because essentially, before we drop down timeframes, what you would have anticipated is that these are now your new higher lows. You have your new higher high. You're anticipating a bit of a pullback to form these swing lows, which you will then anticipate a new higher high. Now, obviously, when you're looking at the market at this point right here, you don't know how deep this pullback's going to be. If it's going to be all the way into these areas, if it's going to be all the way into these lows, you don't know at that given point. You just know that you're anticipating that when price action do start breaking lower time frame structure, that we're going to get a pullback potentially into equilibrium or even the 61.8% fib, and then potentially see that push to the upside. So with that being said, let's jump onto the 15-minute and we'll go straight from Asian session. Let's put our session indicator on and then we'll look through the charts. So this was Monday's Asian session. You can see that we had the break and close above. You then see that we pulled back. London session, little to no movement, and it just is what it is. There's no entry on any given point at this moment. So yeah, Monday would have been a bit of a difficult one. You can see that London session had range pretty much for the whole time. With regards to Tuesday, you can clearly see that price action had formed. If you looking at these structures right here, you can see that this is a higher high, higher low, higher high. So price action broke these higher lows, pushing to the downside, pull back, lower high, lower low. So price action had only shifted structure when price broke above these areas right here. Now, what you can see is that price action in Tokyo had a big impulsive push into these areas. You can then see a pullback and attempted push to the upside before the downside move. Now on Wednesday, this might have been that there was news in the market. How would you have traded this? If you trade in with fibs and fibs only, the thing is you can't really plot this push from this low to this high. And the reason why you can't do that is simply because price action on the 15-minute is still bearish, and you're still anticipating that price action, even though we're getting up into these levels, is still bearish. And it's a bit hard to trade when price action is trading. When you're starting to look for a fib in the opposite direction of actual intraday structure, it's a hard thing to do, and it's a hard thing to recognize. And so I personally don't really do that, just because it saves you from yourself really in the markets. And then you can see that this was the biggest, like a really big impulsive push for London session. After that, you can see the price action. So we formed this new low right here. You can see the price action pulled back Wednesday in New York, and then you can see we had attempted to make a new lower low. However, we failed. Now coming into Asia, this is a pretty range bound market. Unfortunately, there's no clear impulsive push in Asia, so you couldn't have capitalized on this pullback. It just is what it is. Some weeks are going to be busier than other weeks, and other weeks are going to be busier than other weeks. But yeah, and then you come into Friday. I'm sort of anticipating that we are starting to form these higher highs, higher lows. And I'm not going to lie that although we had this mini consolidation late Thursday, I would only start anticipating bearish movements on the 15-minute once we start breaking below these areas. And what you can see is that price action, although it's forming internal structures to the downside, we had only broken structure when we broke below these areas right here at 194,820. Unfortunately, no trade there. And that really is the week. Today, I wanted to speak about something different, guys. I wanted to speak about the first quarter, the recap of the first quarter. And really and truly, what I wanted to do is be honest and be transparent and tell you guys that the actual YouTube channel has been the biggest motivator, the biggest accountability factor that has been holding me and keeping me up to date with me starting to study for my actual exam or assessment for in my career for my professional accounting degree. I have not necessarily like done the best in trading. With that being said, I really didn't do anything, to be honest with you. Like, no, I didn't have any systems in place. I didn't like take any trades. I didn't really anticipate any movements, and it was just a lackluster attempt of a quarter with regards to trading. To be honest with you, it's been the shittiest quarter for the past 5 years with regards to just me being on top of the charts, me seeing chart movement. And I've always told myself that when I do study again, or when I do like an exam, I can't see myself not being in the market. And what I can say is I've made tons of excuses. I've made over this past quarter, this past 3 months, I've made so much excuses for myself, like to myself and to other people, asking how was the week trading. Oh no, I didn't really trade because I was studying, or I didn't really trade because I was tired and I didn't want like that emotion of being tired to impact my trading. But the reality is that like I didn't really do any work because of the lack of confidence and because of really just coming out of last year with like low confidence, being on the down end, and really just like not knowing how to face it. And I just got to a point where I was able to say that, oh no, like trading's not like trading's taken a back seat because I have this other goal, the main goal being studying at this current point because I'm writing in 3 months. And that's not the way to go about life. Like, that's not the way to go about goals. Whilst I do understand that, like, through peaks and troughs in life, you go through moments where you might need to focus on something else just for like a short amount of time, for instance 6 months. But that doesn't mean that you completely take your foot off the pedal and like hit the brake and pull the handbrake up and just come to a complete stop and say there's no momentum, there's nothing, like I'm not doing anything, and then continue with that and like convince yourself that everything's fine. Like, it's the ability to be able to stare at yourself and your inadequacies and look at like what you pretty much done to get yourself to where you are, uh is a great thing as a trader and just as a person in general, like to be able to pull yourself back from destroying yourself or like not necessarily accomplishing the goal that you want to accomplish because you want to make excuses or because it's the easier thing to do. Like David Goggins says that you need to callous your mind, and what that looks like in trading is doing the day-to-day work, looking at your systems, looking at backtesting, does your strategy work, like, and even if there's no trade or if there's a mistrade in the market, like, why are you there? Are you questioning yourself? Do you have processes in plan and things in place to really just capitalize on the process and not just the result, but capitalize on the process and focusing on a process driven environment and creating that for yourself. And so I wanted to be completely be completely transparent and hold myself accountable to like the standards that I do hold myself accountable to, and be honest with you guys. Like, this quarter hasn't been the best. I haven't really traded. I fell back and I allowed myself to use the excuse of trading or of studying to account for not trading or not being present. Now, whilst like me saying not being present in the markets, like, I can give context. I was still doing 15 to 30 minutes a day, and for most people that's going to be fine, but for me it's not. And I do understand that over the next quarter I'm probably going to get busier. I am going to get busy, and when I do complete my goals for Q2 by the 5th of April, I will communicate that to you guys, and I will hold myself accountable to that standard that I am setting for myself. What is it that I want to do? I want to understand macroeconomics and how it actually plays out on the charts. I want to understand how GDP affects how GDP growth, for instance, and the expansion of the market affects pound yen. If the GDP increases for pound, then what happens? If it goes down and the market is contracting, then what happens? How does it affect my day-to-day trading? How does it affect the long-term trading? And like, those are the things that I want to understand. And then also just coming to a point where recognizing and realizing that I need a mentor. And that is the steps forward. And it just is what it is. Setting myself up for success and understanding that it's just a matter of time, but I also need to put in the work, and recognizing that I haven't put in the work this past quarter and holding myself accountable to that. So with that being said, guys, I want you to know that hold yourself to a high standard. I want you to know that you are the only person. I don't care if there's people holding you accountable. I don't care if there's people that's making you feel comfortable. I don't care about anything, but you are the only person that determine where you go to in life. Nobody's gonna sit up at night and tell you you need to do things for yourself. Nobody's gonna hold your hand through life saying, do this, do that, do this, unless it's your mother, your father, but they can only do that for that long. But in life in general and in trading, you need to hold yourself to the utmost and the highest standard that you can in order to become the successful trader that you want to become. So, with that being said, guys, please don't forget that your unmatched perspicacity, coupled with your sheer indefatigability, makes you a feared opponent in any realm of human endeavor. From your boy Master at the Modern Day Trader. Peace out, man.